Microsoft is a dividend paying company. They've been paying an increasing dividend since 2004. And the good thing about this is that they've been able to increase their dividend by looking at the dividend per share history by about 10% every year. And when I look at the 10-year time frame, it's actually 14%. Cool thing by looking at the chart, and this is why I like to invest in companies that are able to grow their revenue, which means that they should be able to grow their net income also. When you look at this chart, because Microsoft has been able to grow their revenue, their net income is also growing, which also then means that they've been able to pay an increasing dividend to their shareholders. There have been some dips in net income generated, but on average, the trend has been an upward trend, which also reflects in the dividend because, as you can tell, the dividend has been increasing by about 10% every single year. Now, looking at the payout ratio for Microsoft, payout ratio pretty much meaning how much net income is the company paying out as a dividend to their shareholders. You can tell that Microsoft has been keeping it at a steady pace below 50%, but there have been some spikes, and these spikes coincide with the dips in the net income that we looked at when we looked at the dividend per share history. But on average, so even though we see these spikes, Microsoft has been doing a great job at keeping the payout ratio below 50%. And I think that's pretty much their goal just by looking at this chart. This is great because when it comes to the payout ratio, I like to see a payout ratio at least below 60 or even 50, but of course it depends on the industry that the company is in. But just to see that Microsoft is working hard to keep their payout ratio below 50, that is something that will allow me to sleep well at night. So one thing that I don't really like about Microsoft when it comes to the dividend itself is that their dividend yield is very low at around 1%. Dividend yield, pretty much you're taking the dividend, dividing it by the price of the stock. It tells you how much dividend you're getting when you're paying for one Microsoft stock, and 1% is fairly low. Usually I like to see this at a minimum of 3% and even higher. There are some companies that have a high dividend yield and a high growth rate. Usually you will notice that with companies that have a low dividend yield, they might have a high growth rate. With Microsoft, that is the case because they've been able to grow their dividend by at least 10% every single year. But there are exceptions. A company like AbbVie, they have a high dividend yield, which is in the 4 to 5%, and they even also have a high growth rate, which is also in the 10+%. So this is one thing that it will not deter me from investing in Microsoft, but it is something that I pay attention to. There is no hard and fast rule, meaning low dividend yield, high growth rate, or high dividend yield, low growth rate, which one is the best to buy. I always say just mix it up. Have both in your portfolio.